Morning, everybody. This is live trading talk with Patrick MontesDeOca. Welcome. We have a decision on Chairman Powell once again renominated by President Biden, and it's causing a little bit of volatility in the market. We have entered a silver long trade at 24.37, and we have already locked in $1,075 on an open contract. We have an open position of $2,275 for the day on silver. Even though we took a small loss in gold here early this morning, we're still ahead about $1,200 for the day. We trade live the variable changing price momentum indicator. We teach and coach in our private trading room. We are trading live silver. We recommended basically to follow a trailing stop, and we're going to recommend to lock in the profits here. Lock in the profits, $2,000.75. So we're netting about $1,000 for the day so far, with a $1,000 loss that we took in the gold market, and we are flat right now. What you have seen is basically the application of the variable changing price momentum indicator coming into today for the silver market. The variable changing price momentum indicator, I use it as a GPS to identify the extreme levels of speculation, the extreme levels of oversold conditions and overbought conditions. With a market like today, for example, where we had this fundamental news that affected the volatility of the market, we have to rely on the accuracy of the variable changing price momentum indicator in giving us a perspective view of the extremes of that volatility, regardless of what the fundamentals were that caused that volatility. Because the price is a consequence of the volatility. And so when the price comes down to our mathematical calculations that we use, which is a combination of pivot points, directional movement, wave counts, vortex mathematics, Fibonacci formulas, and WD Gann formulas to come up with this simplistic structure that you see here that is highly accurate in identifying mathematically the extreme levels above or below the mean. What we see here is the market coming down to the blue levels, and you will continue to hear me that every time the market comes down into the blue levels, it identifies an area that is called accumulation of supply. It is, if you think about it as a GPS for your trading or for your driving, when you want to identify the best possible level to enter the trade, mathematically speaking, the blue levels are highlighted in blue for a specific reason. The algorithm identifies in blue where the area of accumulation of supply is. And when the price comes down into the area, it tells you that you're approaching a mathematical level anywhere from 90 to 95% probabilities that the price is going to revert. And we use mean reversion trading. What we're looking for is the extremes of the market, regardless of what market it is. Regardless, if you're day trading, which is what I'm doing here, I'm showing you how I'm applying this for day trading. This bar completed the target of the daily buy one level of 24.48. The second bar, using the 15-minute bar, came down below that and activated a weekly buy trigger of 24.33. And then it reverted to close above the daily and the weekly. Very strong signal. We recommended to go long, and we booked a couple of $1,000 profit on this trade already. Even though the market is down 25 cents, and our core position obviously is down because the silver and gold are down for the day. But we use this to generate liquidity and reinvest it long term. And we're basically choosing the monetary units of gold, silver, and we're also trading Bitcoin to give us some exposure in the digital assets as well. Now, in Bitcoin, the green line, the daily green level, identifies the average price daily. And for day trading purposes, we don't trade around the average price because it identifies the volatility of the market. And we, as disciplined VCPMI traders, what we want to look for is the highest probability trades. And according to the algorithm, the highest probability trade is either the market coming down to 56,150 or going up to 58,960, like you saw on this huge green bar. Completed the target, it went neutral again. Closing below activated again a bearish day trading signal, and the target again is that 57,280. Now, does it have to do exactly what these numbers say? No, because the market dictates where it wants to go. What the algorithm does is it gives you an idea of where the price action is taking place. And if we look at the big picture, you're looking at the average price completed a daily target daily, and it's trading below the weekly average price of 59,995. So it's in a bit of a bearish mode as it's making reversions into the area of distribution of supply. Now, I mentioned before that when we get to these blue levels, it's called accumulation of supply. When it gets up to the red levels, it is distribution of supply, where the probabilities are pretty high that in this area we can expect supply to come into the market. And as you can see here on this bar, it did, and activated a trigger point for day traders. short a close below 58,960 with a target of 57,280. The VCPMI captures the structure for the day. It also does it for the week. And what you see here is we are live trading the daily and the weekly. The renomination of Powell, it created a bearish sentiment, and it gave basically a reason for the short side of the market to get aggressive in offering supply, basically, at these levels here that we saw earlier. These are, again, the average price. And the observation that I want to make here for you guys is that most of this action comes in overnight. You know, this came in at about 12 o'clock, 1 o'clock, where the market met the target of sell one level of 24.91 in the silver market. And this is basically completing the sell one daily target and also completing the weekly average price. And when it came up to 24.91 at that time, nobody's really trading except for Europe. It activated all these bearish signals, and obviously the Powell news came in and it gave the short side of the market a reason to what I call spoof the market and come down and break the market from 24.76, all the way down to that 24.34 level. The thing that I want to point out to you, according to the Commitment of Traders report, is that central bankers have in excess, I believe, of what is $40 billion on the short side of the market. They have increased their short positions by 10%. And the possibility of another spoof or another washout into the end of this month is very possible, as they are trying to capture the premiums as well in the options markets that essentially were sold, and they want to keep that premium. So every month we get this big sell-off here, which is basically all paper selling. That overwhelms the futures markets, the price of the futures markets. And we see stops taken out all through here. And when it comes down into this blue level, once again, you see the synergy, basically, that the market has with the algorithm. I want to share with you According to the last CBOT report, the COMEX open interest shot up substantially in the last report. The swaps COMEX shorts have increased their exposure to over 40 billion. This is almost a record high that we're looking at, almost as high as 2018. So they have a real interest to bring this market down. The key instrument that we're watching here is the dollar index. How does this drama about interest rates supporting the dollar? And the dollar obviously moving higher here seems to indicate possibly that, interest rates might be underway to higher rates here, or at least the sentiment seems to think. Now, let me share this with you, and I want to share this because this is how I trade, and this is why I'm doing this. What I believe is happening here is that, first of all, I don't believe interest rates can go higher. I think if you really take a look at the debt that we have, particularly on the 30-year bond, we're looking at pretty close to $30 trillion. And I continue to say that it's not only here in the US, but we're looking at a global picture of debt, which is surpassing GDPs by over 100%. And it's unsustainable. So the dollar seems to think about or dwelling or being supported by the idea that interest rates are going up or are going to go up. I think because of the monetary inflation that we're looking at, where we're looking at all this stimulus that has come into the economy. If we're looking at a 30% increase in the stimulus that has come into the market, then you're looking at a devaluation of the dollar by 30%. And this is what's going on. We have a two-sided inflation challenge here. We got a monetary inflationary scheme going on, basically, where they are eroding the dollar, printing all this stimulus, all this money, which is only debasing the currency. And of course, on the other hand, we're looking at price inflation, which is causing this tremendous increase in prices across the board. But it's a global situation that we're dealing with right now. It's not just in the US. And logistically, I think that it's going to take some time to unravel the supply neck, which was caused basically by this pandemic, by the shortage of labor. There's a shortage of truck drivers. And it seems that people really are not concerned with going back to work, but they rather go out and enjoy life, going out to dinner, trying to get back some kind of normalcy in our lives. And yet we have a labor shortage, a tremendous labor shortage. There are a lot of issues that I believe fundamentally the market is trying to dissect, and that's very difficult to figure out, because one is contradictory to another, and it's fundamentals are lag. They always lag behind the market as long as I've been around here. So what I'm sharing with you is the technical side of the market in using the VCPMI as an algorithm that identifies day trading opportunities, swing trading opportunities, long-term trading opportunities. Let's come back to Bitcoin here. We seem to have found support from this huge green bar that was caused by either short covering or new buyers basically coming into the market with the expectations that the market can and will trade above 59.95 and has a target all the way up to $70,950 for the rest of the week. The weekly average price for Bitcoin is $59,995, and trading below it right now is in a bearish sentiment with a target of $53,435 activated unless we close above $59,995. In silver, we are flat. We booked a couple of grand, and we'll let the market dictate again if it's going to come down to activate again that 2448 or what it's going to do. And the VCPMI will identify it. So I don't have to figure out, oh, gee, where's it going? I just wait until it does, and then the VCPMI will activate the trigger point. We continue to have a seller fear in the precious metals. We took a loss of $1,000 earlier. And we are waiting for the market now that is showing it's extremely oversold into this weekly price of 1821. So cycles indicate possibly a bottom to be completed in a few hours. So let the market trade here and try to identify where it wants to go. The E-mini, the stock market just continues to make new highs, regardless of what the economic news is. And obviously, the re-election of Powell, the renomination of Powell, is very, very bullish for stocks. I trade a very specific methodology that I am disciplined in following, and it's been very rewarding. It's challenging because it's not perfect. Some years it's difficult, as it has been since last year. If you've been trading in the gold market, obviously, it's been very challenging. And so sometimes you go with what the market gives you, but you got to be disciplined about making your choices. And it's a question for me of being consistent, following the discipline, the methodology. In what I see is that eventually, it comes out ahead by leaps and bounds. And that's what I'm looking for. And so we have a short-term strategy that we day trade the market. And we use that opportunity to increase our liquidity and reinvest it long-term. And that strategy has been working so far very nicely. I want to take the opportunity to introduce the variable changing price momentum indicator website, now open, where we dedicate basically this website to the products basically that are the VCPMI on a pretty much self-directed basis. And now we have the robo-advisor, Nikki the robo-advisor, that essentially produces the artificial intelligence, and it is presented in a video concept. So please take a look at, if you have a chance, check out our website, and also check out the track record that we continue to maintain in my application of trading live the VCPMI. This is a real account that we started on February of 2020, and so far the net gain is up 350%, with an initial starting capital of $250,000. And I've done it all live here in Discord. And so this is how I, as a self-directed trader, have applied the information. And this is basically what we teach and coach in our live trading room in Discord. Please feel free to join us every morning at 7 o'clock Pacific Standard Time, and you'll be able to see pretty much what we do. Everything that we do is documented in live trading here in the Discord, live Discord trading room. Thank you again for the opportunity to share this with you here. And until next time, my friends, be well, be safe.